If you're a homeowner in Colorado right now, you've probably seen your insurance bill, and you felt that shock. And it is so tempting to just hop online, find the cheapest thing you can, and just call it a day. But I'm going to tell you why that might be the single most expensive mistake you can make.
Tempting? I'm already doing it. Seriously, my renewal just came in and it's up 50%. For what? Nothing's changed on my end. I'm looking at these online quote tools right now and I can find something cheaper in like 10 minutes. Why in the world shouldn't I just pull the trigger and save myself some serious cash?
I totally get it. And that frustration, it's 100% valid. But here's the problem. You're trying to solve a 2025 problem with a 2015 strategy. See, this isn't just about your rate going up. The entire insurance world in Colorado has completely changed. We're in what the industry calls a hard market.
And that 50% jump you saw? You're definitely not alone. The average home insurance premium in Colorado has skyrocketed 65% in just the last 5 years. It's a staggering number, but there are some very real reasons behind it.
Here's why. Colorado isn't a sleepy, predictable state for insurance anymore. We are now officially a dual catastrophe state, right up there with Florida and its hurricanes. We get hammered with massive hailstorms. We're actually number 2 in the entire country for hail claims. And then we have catastrophic wildfires. I mean, after the Marshall Fire, insurers got a massive wake-up call. They are reevaluating every single home, some carriers are pulling out of entire zip codes, and the cost to rebuild has just gone through the roof.
So here's the most important thing to understand. The policy that was perfectly fine for you just a couple of years ago is almost certainly not enough today. The game has totally changed. And just hunting for the lowest price online means you're playing by the old rules, and that leaves you dangerously exposed.
And to really understand what that exposure means, we have to move past the stats and talk about what happens when it all goes terribly wrong.
The Marshall Fire.
Well, it was a tragic turning point, and it uncovered this massive, hidden problem that almost no one was talking about.
A University of Colorado study after the fire came out with this shocking number. It found that nearly 3/4, 74% of the victims were underinsured. Now what that means is their policy limit, it wasn't high enough to cover the full cost of rebuilding their home. They had insurance, they paid for it every month, but when they needed it most, it just wasn't enough.
74%? How is that even possible? These people had insurance policies. They sure did. I mean, look at the story of the Sabti family in Superior. They literally watched their home burn to the ground on their Ring camera. They thought they were covered, but in the end, they spent $1 million of their own money after the insurance paid out just to rebuild. The policy paid what it was supposed to, but the coverage amount itself was nowhere near the actual cost to build a new home.
And that right there brings us to the question you have to ask yourself right now. Not if you have insurance, but if you have enough. If you lost everything tonight, are you 100% certain your policy would make you whole again? Or would you be facing a devastating financial gap, just like the Sopti family was?
You know, the real danger in this new market isn't even the premium anymore. It's the hidden gaps, the sneaky exclusions, and the deductibles that have been slipped into policies to cut costs. These are the things you will not notice when you're just comparing prices online.
Okay, this is what I don't get. I looked at my policy. My deductible is $1,000. That's what I'd have to pay. It says it right there in big letters.
And that's the trap. You're right. Your deductible for, say, a small kitchen fire might be $1,000. But for the biggest risks here in Colorado, wind and hail, insurers have quietly switched to percentage deductibles. Just look at this table. If your home is insured for $800,000, a common 2% hail deductible isn't 2% of the damage, it's 2% of your total home value. So your out-of-pocket for a new roof isn't $1,000, it's $16,000. That is a nasty surprise most DIY policies don't exactly advertise on their homepage.
And here's another little trap, the cosmetic exclusion. A hailstorm rolls through and turns your metal roof into something that looks like a golf ball. It isn't leaking, but it's clearly destroyed. Well, with this exclusion, the insurance company won't pay to replace it. And the real pain comes when you try to sell your house. The buyer's inspector flags the damage, and now you're forced to pay for a new $30,000 roof out of your own pocket, or the whole deal falls through. But honestly, the single biggest and most costly mistake that people make is confusing market value with reconstruction cost. Market value is what your home sells for on Zillow, and that price includes your land. Reconstruction cost is what it actually costs for materials, labor, and permits to rebuild it from the foundation up after a fire. They are two completely different numbers, and your insurance is supposed to cover reconstruction. And right now, those costs are just exploding. I mean, look at this. Even a standard home in the Denver metro area can cost $400 per square foot to rebuild. So a 2,000 square foot home could easily cost $800,000 to reconstruct. If your policy is still based on what your home was worth 5 years ago, you could be hundreds of thousands of dollars short.
Wow. Okay. This is overwhelming. Percentage deductibles, cosmetic exclusions, reconstruction costs. How is a normal person supposed to keep track of all this stuff? It honestly feels like the system is designed for you to fail.
And that is exactly why having an expert on your side is more critical right now than it has ever been. You basically have two choices. You can go to a direct carrier who works for one company and can only sell you their products, or you can work with an independent broker. A broker works for you. We're not tied to any single company, so we can shop the entire market, over 40 carriers in our case, to find the policy that offers the best actual value and the right coverage, not just the one that's cheapest on the surface.
I mean, think about what usually happens when you get an insurance quote. You get a 50-page legal document emailed to you. It's dense, it's confusing, and let's be honest, almost nobody actually reads it. They just look at the price and they sign.
We decided that whole process is just broken, so we do it completely differently. Instead of a confusing PDF, we create a custom 5-minute video review for every single client. It's a real human being walking you through your options on screen, line by line, in plain English.
And the process is so simple. First, you securely upload a copy of your current policy. Your declarations page is all we need. Then, we do all the heavy lifting, comparing it against options from over 40 carriers to identify those dangerous gaps and find better value. Then, we send you that short, personalized video that explains everything so you can make an informed decision with total confidence.
So, it really just comes down to a choice. You can go down the path of uncertainty, trying to navigate this incredibly complex market all by yourself, or you can choose a path to clarity and, frankly, to confidence.
Look, you can absolutely try to decipher these 50-page legal contracts yourself, hoping you don't miss some critical exclusion that could end up costing you tens of thousands of dollars, or you can let us do it for you.
Okay, that makes a ton of sense. So how do I get the video review? And is it free?
It's super simple and it's 100% free. Just click the link you see in the description. Upload your current declarations page. We'll shop all those carriers, find the gaps, and send you that video breakdown of exactly what you should do. Click the link, get the quote, and sleep better.